Okay, it's time to say bye-bye to your banker. Yeah, I mean, these people give you no money on interest rates for money you give them, and then charges you the highest rates in the world when they lend you money. Now, there's people really on the internet, it's called peer-to-peer lending, that will give you a heck of a lot better rate if you give them their money to invest in other people, and they give these other people a heck of a lot better rate than any bank would to borrow the money. Man, what's better than that? What will move the country faster, and our whole economy move faster forward if, number one, you could get a higher rate of return on your investment, right, or your money that you're holding somewhere, and the person borrowing the money gets it cheaper to solve their problems or to invest in other ideas. So I just can't understand how anything can go wrong with this, because it just helps everybody so much better in the economy, instead of having these middlemen that are there now, the so-called banks, that give you 1% interest. These people will give you 5, 6, 7, 8% interest, and when you go borrow money from them, they're going to charge you 12, 15% interest, and these people will charge half of that, the interest that you're going to get. So that's why I think it's so important. It's something we have to learn. It's growing. It's not, and these are not little, little penny kind of things going on. No, these are billion-dollar businesses already, and they're going to grow and keep growing. So pay attention and listen to this expert who's really tested a bunch of these out. I mean, he's tested 2 of the biggest out, and there's really dozens, and there's more coming. So you better start learning about this stuff, because it's where we're going. So get there first. Well, Jeff Rose, man, with goodfinancialsense.com. Sense, I can't even say it. Goodfinancialsense.com. Now, who could argue with that? We all need that. And you got this great book, Soldier of Finance.
Yes, I do.
Now in the major bookstores, and also through goodfinancialsense.com. But more importantly, I found an article that you wrote about peer-to-peer lending, which is, I think, a very important thing that's going to be growing, and the banks are going to be pissed and try to get into this business and everything and make it all screwed up. But until that happens, it seems like a good deal, for people with small amounts of money to invest to get better returns, or people who have credit card debt and pay it off at a better rate than you can get anywhere else. Is that right?
Yeah, that's what I've discovered. And, just so your people know, I knew nothing about peer-to-peer lending about 5 years ago.
Ah, an honest man. Wow, you're the one.
I started blogging and I started reading articles about it. I'm like, what is this peer-to-peer lending? What is this all about?
Yeah.
And, as a financial advisor, I looked at it more from an investing standpoint. I always talk about diversifying and looking for other types of investments. And I read about peer-to-peer lending and I was interested, but I was still skeptical. I didn't know anything about it. So I put in a small amount of money, it's a couple $1,000s, because I wanted to test it. So that I could see what it was all about. And, here we are, that accounts 5 years later, and, it's averaged, I went a little bit more conservative. You can go conservative to aggressive, right, but it's averaged me just about, I think, over 9% return.
9%. So instead of a savings account, it'll give you a percent if you're lucky, and you could get 9%. That's pretty safe, huh?
Yeah, and that's the part that I was like, okay, so this is legit. This is for real. Yeah. And I think you mentioned there's an article that I wrote where I had more money. It was in my retirement account, and I just felt the market had hit a point where I was just a little bit worried we were going to take a dip. And I thought, you know what? I'm more sold on peer-to-peer lending. I want to give it a real go. I want to give it a real try. So I put in a larger amount of money. But there are 2 different. There's several peer-to-peer lending companies, but the 2 biggest ones right now are Lending Club and Prosper. And I'd already had opened an account with Lending Club, but I wanted to try them both out. So I split it up and I put relatively half into one and half in the other. And I did like a 1-year experiment to see how they would both do. And it's been good. I mean, both of them have, and I actually went more aggressive because I thought, you know what, let's see.
Getting your sea legs, huh?
Yeah, I felt a little salty. I'm like, all right, I've had a good run. Let's see what happens. And now, almost a year later, it's actually been double-digit returns.
Wow.
In that 12, I think, don't quote me exactly, but 12 to 13%, if not higher.
Wow. So you're getting 13% on your money, and the bank's giving nothing. In the stock market, who the heck knows, you're going to lose all your money anyway.
Yeah, and so I'm even more sold on it. And
Yeah,
but like anything, you gotta approach it. You gotta do your
yeah,
research. I wouldn't put everything in there,
right.
but I'm definitely very very impressed with what it's been able to generate.
Well, how safe is the money? I mean, if you put it there, because it's not a bank, it's not FDIC insured, right?
Correct, correct. So here's one way. So what is it like? What exactly are you investing in, or what are you doing? So you got to look at it from two sides. So if you're somebody that needs money because you want to consolidate your credit card debt, maybe you need a loan to refinance like a car loan or a home, or maybe you need a loan for a business, and instead of going to your bank or credit union, you would go to one of these peer-to-peer lending companies and you apply. And it's no different than applying to a bank or a credit union.
So it's the same background check and everything as a bank.
Correct. So it's
Okay,
the only from the lender standpoint is either hopefully you're going to get a lower interest rate and you're
uh-huh,
going to get approved a whole lot faster.
I see. Uh-huh.
So that's the benefit.
That's from the borrower's standpoint.
From the borrower's
Right,
perspective. So let's say you need $10,000 for a business loan.
right.
You get approved, and now your loan goes on the platform. So now from the lender or investor's point of view,
Hmm.
I'm going to lend you money or invest in your loan,
Right.
but I'm only going to invest anywhere between $25 to $50 of that
Ah,
$10,000.
So I'm just taking a piece, so my risk is not much. I mean, if that one idiot turns out to be a deadbeat, it's only $50, right?
Correct. Yeah. So like the whole concept are microloans. And,
right.
people understand the mutual fund concept of, putting a little bit of money into one stock in a mutual fund. I mean, this is kind of like the mutual fund
I
of
see.
lending. But banks are making good money loaning out to consumers, and basically now because of these peer-to-peer lending companies, we're acting as that role. Like we're the bank, but
Uh-huh.
we don't have all the risk because, like you said, if they
Right.
default or do something stupid, okay, I'm out 25, $50.
So in other words, it's the same thing as the bank's doing, and they're lending it out for 15% or whatever it is, and collecting 14 and giving you one. If you're putting your money in the bank. Here, if you go right to the consumer this way, you're getting maybe 10%, plus or minus or something like that on your money, huh?
Yeah, and I know if you go to Lending Club's site now, I don't. When I first started in 2008, the returns were posted a lot higher. Now I think the most conservative portfolio they say is like 6 to 7%.
10%, right.
So a little bit more on the conservative side. But like you said, I mean, right now I think clients, if you get a 5-year CD paying you
Yeah,
1.35%,
right.
whereas this, it's now the other warning I'd have to say is this is not, if you need money, if you need liquidity, this might not be the best option because
I see.
to sell it, there is a secondary market that you have to go to try to sell the loans,
Right.
which I think could take maybe 3 months to get the money.
Hmm.
And I talk about that in the post. So,
Yeah.
this is not for savings money market money,
Uh-huh.
but if this is for, if you're locking up your money for a CD for 3 to 5 years,
You might as well put it here, right?
we'll put it here. That's my thoughts exactly.
And as long as you diversify it too, so it's not taking your 10 grand and giving it all to one cat, right?
And the beauty of these platforms between the Lending Club and Prosper is the second largest peer-to-peer lending company out there right now. They make it so easy to where, you want, least conservative, most aggressive, and they'll go ahead and create a lending portfolio for you.
Portfolio.
I mean, like a dozen different people that would fit your categorize, and so you split it all across them. So really, you're taking insurance because if one of those fall through, it's not a big thing.
Correct. And like, let's say if you're more conservative, you might get one or two risky notes in there, but you could always remove those if that's, if you
I
want to go
see.
even more conservative,
Uh-huh.
you can get rid of those. So it's a really user-friendly platform. I'm really blown away, and obviously the return has been, I've been very, very impressed.
But also, I mean, from a borrower, you've got credit card debt paying 25% or whatever the heck it is. But there is a floor of it. It's not for anybody to borrow money. I mean, you need like 650 on your credit card or something your score.
Yeah,
That is
yeah.
correct. One thing when I first heard of peer-to-peer lending, I just assumed it was for people that had really bad credit, and
Right.
they were needing like a loan because no one else would approve them.
Right.
And that's actually completely not the case. I think with Lending Club, it's like a 660 minimum credit
Yeah.
score. Prosper, they go a little bit more aggressive. I think they'll go down to 640 on your credit score. So I mean, you can't have, Which, but you appreciate that from a lender or investor's point of view. I mean, if you want somebody at least has exactly.
But if you have, a 660 and somebody's charging you, the credit card's charging you 22%, you got to get out of there.
Yeah, and that's where peer-to-peer lending is a perfect fit.
Yeah, well, that's just terrific. Now, you have a blog that helps people with all this kind of stuff, right? And there's no charge on the blog even, right?
Yeah, no, free information, good financial sense, and that's CENTS.com. I've been running that blog for 5 years now.
Wow. But also what's great about your blog, you also give dancing lessons, I see.
I have to blame my wife for that one. One thing, so for those that don't, like my wife she's my sounding board, and as most people know, personal finance is not the most exciting topic. Obviously you do a great job of trying to make it exciting and enjoyable. Right. And I've done videos, I've done blog posts, and my wife has been, the best critic, and she's like, okay, that's boring. You need to do something more fun. So she's made me dance on a few videos.
Well, you look great, though. I mean, you got those moves, man. But her blog is thehouseofrose.com, and she helps young families. Is that what she does on the blog?
Yeah, we've got 3 young kids at home, 3 young boys. So, I mean, she covers anything from recipes to design, to just, how do you manage life, when you've got a family of 5 and, total chaos. So she has a lot of fun on her blog too.
Right. Well, you sound like a delightful couple, and you're out there in the Midwest, Carbondale, Illinois, right? I don't think most of us know where that is, but it's Southern Illinois, a good, solid, American out there. And your blog, Good Financial Sense. .com, and your wife's houseofroseblog.com, and more importantly, that article you have about the difference between Prosper and Lending Club for peer-to-peer lending. If you want to borrow money or lend money, it's a great article you have on that blog, and I appreciate you doing that, and I think it's very helpful to people, and you're a financial advisor in my mind that speaks English, man.
That's my job. That's what I try to do. Our industry is horrible with industry jargon, so I try to make it fun and entertaining, but also, I want to be able to get something out of it.
Yeah, but that's it. It's helpful. Well, thank you so much, Jeff. Thanks for being there.
Thanks for having me. I've enjoyed it.
GoodFinancialSense.com.
Yes.
See, so you have to start learning non-traditional sources of money. We all been institutionalized so much about these, the way things have to be done. But there's other ways of doing things, and as a result, it could be 50% cheaper, but nobody knows about it.